Hello, investors. Welcome to another edition of 18 Minutes with 180 Markets, a raise day edition. Investors, it is extremely rare that you can find out there a company with a world-class management team on a mega trend, an ESG trend, clean energy trend, that is attempting to build an industrial scale product that is in the billions. And you can get it all for under $100 million right here, right now. And with us to talk all about it is Ross MacLachlan, CEO and Managing Director, depending on where you are, of Kalina Power. And with that introduction, Ross, welcome to 180 Markets.
Hey, great to be with you.
Hey, Ross, can you just tell us, maybe spend a couple of minutes about your background and also about the entire team at Kalina, because it is truly an incredible team.
Well, thanks. For many years, I've been a technology entrepreneur and got into the alternative and renewable energy space about 15, 20 years ago. And during that time, also became a board member of a very, very successful conventional energy player called Pristine Power. About 5-6 years ago, Kalina had the predecessor name of the company was going through a reorganization and restructuring. And one of the largest shareholders had identified that they should talk to me. And they did. I spent about a year working effectively for free, trying to understand better whether or not this story had legs and how much of an opportunity it was. And what's interesting about it is that when I was at Pristine Power, the entire team at Pristine Power wanted to go ahead with the Kalina cycle. Everybody knew about it. Everyone's known about it for a long time. And I knew about it. And this was really intriguing. And after really spending a lot of time and understanding the story, I then decided to make that leap and get seriously involved. And of course, the first thing I did was respond to all the inquiries I was getting from my previous colleagues at Pristine Power, who were very interested and very keen to get involved. So when you start to look at the team that we've assembled there, I mean, this team is pretty remarkable. And there's not, as you said in your opening, there are very few companies that I can look around and see the caliber of not only the board of directors, but also the entire management team. And what is quite unique about our team is the board and the senior management team all have experience in the power industry. More importantly, every one of those individuals, every one of them, at one stage or another in their career, have been involved assessing, analyzing, quoting on, competing against the Kalina cycle. And all of them recognize how big this opportunity is, and that's why they're all involved.
Great. And so can you just talk about, we'll come back to maybe some of the board members later on, but can we just go into the product? What is Kalina? Can you just explain maybe, and for at a high level, waste heat to power and how Kalina fits in, and also maybe possibly how Kalina is unique?
Sure. First of all, as I'm going to explain a little bit about what our technology does, it's very similar to other technologies, but we have a unique aspect to the Kalina cycle, which differentiates itself. But I think your listeners might want to know the industrial waste heat to power sector, largely dominated by a company called Ormat, trades on the New York Stock Exchange. I think it's about a $4 billion market cap. Also, Mitsubishi Heavy Industries. These are companies that are involved in the space and are deploying organic Rankine cycle, which is that competing technology to ours, and it came up previously before the Kalina cycle did. And it is already an established multi-billion-dollar industry. That's the first thing you should know. The second thing you need to know is what do they do and what do we do? Well, what they can do and what we can do is effectively take sources of heat that are not really conventionally hot enough to make power by the conventional means of boiling water, creating steam, driving a turbine, and making electricity. It's just, perhaps it's hot water, or perhaps it's just very hot air coming off the flue gases in a cement plant or a steel plant. The issue here is you can take that wasted heat, which would otherwise just be evaporated into the atmosphere. You can take that wasted heat, and if you can get it sufficiently, a sufficient volume of it, then you can boil something else. And that's called a working fluid. And you can boil a working fluid that has a lower boiling temperature than water. If you do, you can boil that, you can create a vapor. The vapor is like a steam, it drives a turbine and you're making electricity again. And that's what Ormat does, Mitsubishi Heavy Industries do with their ORC solutions, and that's what the Kalina cycle does. That's effectively what we all do. The difference is, the fundamental difference is that organic Rankine cycle uses things like pentane or butane as a working fluid, or even refrigerants, all of which have a fixed boiling temperature, much lower than water, but it's a fixed boiling temperature. The difference is with the Kalina cycle, and this was the genius of Dr. Alex Kalina when he did this, is he recognized ammonia and water have a similar molecular weight. So if he could design, and he did, design a power cycle, that means you can adjust the concentrations and mixtures of ammonia and water. That means you can vary the boiling temperature. Why is that important? Well, why that's important is because you can imagine the heat that's coming off of a steel plant or a cement plant in the middle of the summer, when they're in full production, is much different than if it's in the middle of winter and they're at low production. So there are changes in the volume and the temperature profiles of the waste heat. And that is a significant difference. And with Kalina, we can always optimize and make power, no matter whether that is a lower temperature or whether or not there's a lower volume, and we can maximize. And we're about 30 to 40% more electricity would come off of the Kalina cycle than the organic Rankine cycle.
Right. So you're far more efficient, which is obviously, incredibly important. And then, maybe switching it to a second, that's the process where you're implementing. Can you just talk about Canada, Alberta, why this region, and what makes it important from your point of view?
This was, I'm not kidding. This took us a while to really focus and understand that this is exactly what we needed to do. When you have a technology as exciting as the Kalina cycle, you're bound to do exactly what our predecessor management teams and everyone else had done, which is go sell the technology in every application wherever someone's interested. And all of a sudden, next thing you know, you've got 16 plants built around the world in 4 different applications, none of which are similar to each other. And next thing you know, you're excited about that, but you're not making any money, right? You're not,
because you're all over the place.
That's right. You're all over the place. The second thing you're doing is you're not focusing on the things which are essential in industrial scale commercialization. This technology has already been commercialized, but what hasn't been done is what was in a very interesting report done by Technique about and Stone and Webster too. Both of them said the same thing. Effectively, this technology is commercialized. It is ready to go. It works. What is needed is an industrialized commercialization strategy. And that's what we're doing, which is to modularize our standard sets of design processes for each of the ultimately for all of the 7 different variations of the Kalina cycle. So we're focusing right now on the first 2 that we're doing, which is for the waste heat coming off of a gas turbine, and another one which is a standard low temperature geothermal application. Those are being standard designs. From those standard designs, we end up with a supply chain of the key vendors, which will be the same for each of the applications. And then what we do is we have those modularized so that we can deploy them effectively. We don't go after applications where we can build a single plant and be very excited about it. We want to build an application for each of these where we can identify multiple projects, multiples. So now, if that's going to be our strategy, how do we do that and cost effectively? We had a market cap of 20, 30, now $40 million. That's just not enough. What do we need to do? What we said is, let's go make some money. And that's what we've done. We've identified in Alberta, because we have a great team there for all the former Pristine Power Group. So what we did is we identified the Alberta market, which is shutting down 5.7 gigawatts of coal. They know they're going to be short power. They have a very aggressive strategy for distributed power generation, which means smaller size plants where the demand is in regional parts of the province where there's an industrial load, but there isn't supply, and they're losing all kinds of power as it's being transmitted over the wires for all these remote areas. But these industrial users need baseload power. They need to be able to turn it on. They need to know it's reliable and it's available. So we have identified, and we've done this, we've identified an opportunity to go out and to go after about 10 good-sized projects in the province. And the first one we're going to be doing, and this is in Alberta. So we've identified this opportunity, and these will all be exactly the same configurations. We're using 32 megawatt power blocks, 22 megawatts with Siemens, 10 megawatts with the Kalina cycle. Everyone will be the same. Some places will put 2 of them in, some of them place put 1 of them in. So anywhere from 32 to 64 megawatts in every location. And that will be a way of going after multiple projects. Now, the outcome of that, and this is where we're at right now with our first project, we're in a position now where we have a power block designed with Siemens for ourselves. That's a distributed generation project that could be deployed anywhere in the world. That's where we will be here in a couple of months, where we could deploy this anywhere in the world, let alone in Alberta. But we also will end up in a situation where we have a module of the Kalina cycle at 10 megawatts, which we can then put on other gas turbines anywhere else in the province and anywhere else in the world. And that's the first example of going after an industrialized scale deployment.
Right, because to be clear, the only way you can be industrial size is if you can rinse and repeat, so to speak. You have a modular design, so you can put it anywhere, number one. The second thing is you always want to be entering markets, and this is with anything in the world, into where there's a supply-demand imbalance, there's huge demand, not enough supply. And that's what you're finding right now in Alberta. But importantly, you can identify other markets too down the road as well, can't you?
That's absolutely right. I mean, right in our own backyard, there's opportunities in Alberta, other provinces in Canada, just south of us down here in the United States, of course, right down into Texas. But honestly, the world's our oyster here. So what we're doing is partnering up with our supply chain partners. This is very important, who are going to find the key elements to the 10 megawatt Kalina cycle design, such that when we're ready, we can then take that out and deploy that pretty much anywhere in the world. Now, that's just for the first application of the Kalina cycle on the gas turbine application. Now we're doing the same thing with a 10, 12 megawatt design for geothermal, and we'll end up with that design sometime in the first half of 2022. We've already done the designs with power engineers, and now we're going to be taking that to a modular design and get that so it's a package design that we can then take anywhere in the world.
Great. And maybe turning now towards the specific, to Saddle Hills is your first project, and it's really, as you said, you're in there to make money. This is going to be a moneymaker. Can you just tell us about the project? And also, importantly, you have had some very recent milestones. Can you just talk about them as well, please?
Sure. But let's talk about the money, because I think that's probably the most important part. I really want to keep emphasizing this. And I know our presentation, our PowerPoint, I think really tries to drive this home. But for the listeners who haven't really recognized this, if you look at what our mission statement is, it's to establish a profitable business in Alberta, Got
to pay the bills.
We can then use as the backbone and the foundation with which to then start to go after these other applications. More importantly, go after these other markets. Okay, that's what this is all about. It's not about, we built a plant. It's not about, we built 2 plants. It's about, what do you do? Are you laying the foundations down so that you have a profitable business? For us, going after a profitable business, for those of us on our team who've been in the power business forever, we realized it's not that difficult. We believe what we can do is go and do what we've done before, which is you develop a project and you look to end up with an ownership in that project. You want to have an ownership in that project.
And that goes to your earnings model, right?
It goes to our earnings model. So this is not new. I don't care if you're doing a shopping center or if you're doing a power plant. Everyone's got their different variations on the fees and et cetera, et cetera. As long as you can develop a reasonably profitable project, you have a very good shot at getting a 4% development fee as a developer. And then we're looking at an ongoing carried interest of about 10%. Now, at Pristine Power, we had ongoing carried interest of about 20%. So when we're looking at 10% here, these are reasonable numbers for us to be going after with our first projects. The beauty of that, of course, is if we get our first projects done, we want to have that base with which we start having ownership. We don't want to just be licensing things out, because if you license things out, how much money are you making? You make a lot more money having an equity interest in these projects. And the way you get that equity interest is developing the projects, getting a free carried interest, and over time, then start taking and increasing your ownership in each of these projects that you're doing. That's in a nutshell what we're doing with the distributed power generation projects in Alberta.
A repeatable cash flow.
For cash flow, to have a balance sheet. My goodness, wouldn't it be nice to have a good solid balance sheet? That's what that's all about. Not chasing every opportunity around the world, not chasing every opportunity for a new application, but rather making some money with those that we have right now. We will then be in a position to also continue licensing the technology. So I'll give you an example. A big pipeline pipeline companies looking to put waste heat recovery on their compressor stations. They'll want to own those. Not likely that we'll own them. We're not developing the projects. Those are their projects. So they'll be licensing those from us. And when they license them from us, we get engineering fees. Depending on our level of involvement, we may get some additional fees for our involvement in developing the application for them. And we'll end up with about $35,000 per year per megawatt of the Kalina cycle that's deployed.
Very straightforward. And can you just also just talk about maybe the size of the project and where it stands as far as you received the first notice to proceed. Can you just tell investors why it's important? And then also another question is about the size of it, circa $200 million. How are those discussions panning out? And obviously, your board, certainly in your background, I would imagine would help tremendously in those negotiations.
Sure. You may have just gotten ahead of yourself. I think you said we've received full notice to proceed. I think you were confusing that with we've just recently received our approvals for our Alberta Utilities Commission permit. Okay. Yes. And this AUC permit is very important. So let's just talk about Saddle Hills. It's called the Kalina Energy Center, Clean Energy Center, Saddle Hills, and each one of these is going to end up with our name branded on each one of these projects. But we, of course, for ease of reference, we call it our Saddle Hills project. And the Saddle Hills project has had all of the fundamental regulatory approvals in the foundation of them pieced together such that we could then submit a proper application to the Alberta Utilities Commission, which they reviewed, months and months of reviewing, a few things going back and forth. But because we did a really darn good job doing it, we got approved, I think, relatively quickly and with very little difficulty. And that puts us in a position now to have the key document that we need. It's as I was saying to you offline earlier, to put it in the proper context for everybody. Someone might be building a house and they know they can't do anything. They can't even get someone to go to the house and even do any work until they've got a permit on it.
Sure.
And especially these days with environmental issues and all kinds of things which are really critical, it is the number one thing to have for us. And so we have that now, and that puts us in a position to now complete the balance of things which we believe are necessary to reach full notice to proceed. And we're targeting that to achieve that later in this fourth quarter of the year.
Great. Okay. And then also, as far as the pathway to production, when ideally for Saddle Hills, when would it come online?
We're looking in the, whether or not it's the first quarter or the second quarter of 2024 COD, we're looking at the first half of the year. Right.
And then also on the corporate side, there are a couple of things. Number one, you put it out there to list in Toronto in 2022. How do you think that will help the company? Will it bring in a new investor base, or just some more excitement, do you feel?
Well, just to tie in a little bit on the last question you had asked me and didn't answer, and then it'll tie this in nicely, I think, to the Toronto designs here for a Toronto listing. There is no doubt that $214 million is a lot of money. And I'd just like to speak to your audience just a few minutes because I think it's important to talk about that.
Absolutely.
When we look at combined cycle power plants typically are in the range of 400 to 800 megawatts, right? That's significant. This is a combined cycle power plant, which is taking the waste heat and using that to make additional power. So we're using 22 megawatts plus 10, that's 32 megawatts. That would tell us that if you looked at, you'll never find a combined cycle, traditional, conventional combined cycle power plant. You'll never find them that small. They're just not made. So from a cost per megawatt basis, it seems quite high. But from a profitability point of view, it's quite efficient. And the reason it's quite efficient is because you're able to locate it close to where the load is, where there is a requirement for that type of power. And the heat rate that we have, that's the amount of really energy that's associated with making that power. Our heat rate is so efficient. Just to give you an idea, the gas turbine on its own, if it was sitting there, would be making 22 megawatts with its normal emissions that would go out.
Right.
We come along, we're adding 50% of zero emissions. And what that does is it lowers the overall emissions for that project, therefore, and it makes it extremely competitive, and it can compete very competitively. Therefore, it's drawn on and it's used more frequently. And because it's used more frequently, we can make more money. So these projects, while they're expensive on a cost per megawatt basis, it's really important your listeners understand it's not the overall cost, it's how much are you making. And if we can show that we can get reasonable and good enough returns, that then attracts the level of debt that we will need for the projects. And we are right now going out to market for that debt, but we're not doing this in a vacuum. We've been talking to debt providers for now the last 2 years. So we have an understanding of what the requirements are, the criteria are, and we're now putting our package forward now that we have the AUC permit. And that takes us to your question about Toronto. Because if we're doing this much activity in Canada, we believe that there's probably, it improves our chances going forward on the other projects that we're looking at doing, opportunities to look at equity participation in these projects, opportunities to accelerate our plans, especially if all this activity is happening in Canada. It's good for us to have a Canadian presence and a proper listing.
Yeah, and also, don't you feel like it gives there are investors out there that are will only invest into Canada, and it gives them an opportunity to participate as well?
Well, that's exactly right. That's exactly right. Yeah.
Right. Hey, Ross, I can't help but think, there's a lot of moving pictures here. Can you just, or pieces, I should say, can you just go back to the board and again to your, in closing, to what you bring to the table, even the debt funding, as you said, you've spent the last 2 years talking to people, but you've really spent way longer than that in this space of understanding from from the Stone Peak days and everything in the board. How does everything come together? Can you just tell people, like, for example, who is Jeff Myers and who is really behind you? Just be a little bit more specific.
Sure, I'd be delighted to do that because, Jeff Myers, just one of the best power developers and maybe in North America, as far as I'm concerned. And I think he's up to something like over 4 gigawatts or 5 gigawatts of total power projects that he's been involved with. And he's a senior operating partner in the power sector at Stone Peak, which is a massive infrastructure fund. I'm thinking it's now $30 some odd million under management.
Yeah, 30 billion. Yeah.
30 billion, sorry.
Yeah.
And he spends about a third of his time with us, involved with us. But more importantly, the guidance that he offers in terms of understanding what our projects need to deliver, both in terms of actually how the integrity of the projects and the quality of the projects and the partners and the building of the projects, but also what those returns need to look like in order to attract the right level of investment. As he says, any good project will find the right money. You just have to have the right foundations behind it. And that's really what Jeff brings to the table, just an incredible wealth of knowledge and an incredible set of leadership with his involvement with the entire team. And then you have someone like Peter Littlewood, who joined us 4.5 years ago, I guess. And Peter was the former number 2 guy for about 12 years at China Light and Power, $36 billion company. Largest, I think, power company in all of Australasia, certainly as a power developer, even did a lot of projects in Australia. Peter brought to the table and has brought to the table some guidance as it relates to EPC construction, the right types of contracting methodology, but more importantly to me, and it was really quite amusing, I didn't realize this when I tried to recruit him. I didn't realize until about 4 months after he joined our board of directors. And this perhaps speaks to why he got involved, but he was hired as a consultant to do the due diligence when a company out of Japan acquired 35% of Ormat, our biggest competitor, and took all the licensing rights for Asia. He had an opportunity to, as part of his due diligence, understand the Kalina cycle. And he thought when I called him that I was calling him because of that, but I had no idea. but he brings a wealth of knowledge in this sector. But more importantly, again, the key parts of what you need to do in terms of getting your supply chains in place. And the supply chain piece and the project development piece are really coming together here. So now when you look at our team, for example, in Alberta, we have our general manager, former head of business development for ENMAX, the second largest power company in all of Alberta. He's with our team. If you look at all of the folks that are involved in our team, they've all contributed. They've all contributed to what is this idea, which is establishing this industrialization model. It's not about commercialization. We have to be able to commercialize on an industrialized scale. And we have to go after markets where there's not an opportunity to sell 2 or 3 of these plants. We have to go after opportunities where there's opportunities for tens, 50, hundreds of these plants in each of these applications. The one thing I do want to impart to your audience, I am not sitting here today saying we're going to get traction in all 7 or all these other 11 perhaps applications of the Kalina cycle. I'm not saying we're going to do that right away. What I'm saying is each of these applications unto themselves is $1 billion opportunity. That's how big an opportunity is. What we're going to do is a very, very focused way of being able to go in and be successful in each of these first 2 or 3 applications and build this commercial success that is so vital to be able to then go and exploit the opportunity that we see.
Ross, I think that that is a great place to stop as far as you are trying to build a mega company here of industrial size. You have the right team behind yourself that you're what I call in the weeds. They're not just people writing a check, so to speak. We are incredibly excited about the future, and also, in closing, certainly, it's an environmentally worthy endeavor, which also has to make you feel good. Ross, thank you so much for your time. This has been fantastic.
Really enjoyed it. Thank you.
Bye-bye.